What's going on, everyone? So we're going to talk about what is a dead cat bounce. So you may have heard the term before, a dead cat bounce this, dead cat bounce that. You know, what exactly does it mean, and what does it realistically mean for you? Okay, because obviously we're all traders here. Either we're scalpers, or day traders, or swing traders, or long-term investors. You always hear that age-old adage, dead cat bounce. So a dead cat bounce is going to be a little bit of a relief rally, a little bit of a green day or a red to green move, intraday, where generally speaking, we're trading below supply. So what that means is, in this case, right now, the NASDAQ 100, we're trading below a lot of supply. We're underneath the 50-day moving average, which is bearish. We are underneath the 200-day moving average, which is extremely bearish. At one point today, intraday, we were down almost 18% from highs on the triple Qs, meaning we were very, very close to what is quote unquote called a bear market. We are in correction territory. Now, with that being said, any sort of big move down is always going to have these big swings back up to the upside. Nothing's going to go straight down. As much as it seems that stocks, are going straight down, nothing's bouncing, nothing's starting to rally. Even when the market is going higher, it seems like stocks never coming down. Stocks always come down. Stocks always go up. With that being said, the relief bounce, the dead cat bounce that we're looking for today, if you take a look at charts and you start scanning through some charts, what you want to look at is the stocks that put in a green hammer candle today. Okay, so in this case, I'm just going to use the index as an example here. We're looking at the triple Qs. We have today's high. We do have this this green hammer candle here. We could expect a little bit of a dead cat bounce tomorrow. So with that being said, what we would be looking for is any stock or ETF to take out today's highs. Now, where potentially are we headed if we do get a little bit of a relief bounce? Potentially where we're headed is to the next area of supply, meaning the next area of resistance. We can take a look at this green line on my screen that I'm trying to highlight here in blue. This is the 5-day moving average. Now we're still trading below the 5-day moving average. So this is telling you that sellers are still in control of the stock. They're still in control of the ETF. So forth and so forth. So if we're looking to bounce something long tomorrow, or maybe you're looking for a day trade, maybe you're holding some long positions, you kind of covered your shorts today. Now you're looking for a day 2 bounce. You're looking to, maybe make some cash flow. What you're looking to do is kind of just stay patient, sit on your hands, wait till we confirm today's highs, right? Wait till we confirm today's highs. And then you're going to take those entries and you're going to take cash flow, meaning you're going to take profits into the 5-day moving average. Okay. I'm not calling this a bottom. As of right now, we have a short-term bottom here on the triple Qs at 334. So if we do bounce and we come into the 5-day moving average and we get rejected, and then we start to roll over again, you can sort of use this rejection as an area, a line in the sand to the top side, a ceiling, so to say. Use this area to hedge your long positions short and ride this move back down to the downside. Obviously, if we were to take out 334, that's going to spell more selling pressure. And on the NASDAQ 100, it does have room down to around $320. So with that being said, all we're looking to do today is take stocks into this 5-day moving average. And then being that we're traders, we're going to reevaluate and reassess the charts at that further point in time. So if I just kind of take a glance at a couple of stocks that I like to trade, if we take a look at Tesla here, we put in a green hammer candle, 933 is going to have room to the next area of, resistance. That's 958. That's your expected move for tomorrow. If you get more than that, so be it, but don't be looking to get in here at 933 and hold this because you think it's coming back up here to 1200. We're just playing between the lines. If you remember when you were a kid, they gave you a coloring book in school. Teacher tells you, parents tell you, stay in between the lines. You're going to want to stay in between the lines, especially in a volatile market that we're in right now, where we're getting these big, massive intraday swings to the upside, and these big, massive rug pulls, intraday, and stocks are coming down lower. If we take a look at a stock like, let's say, NVIDIA, right? I like to trade NVIDIA. We take a look at NVIDIA. NVIDIA put in a green hammer candle. That next area of supply, which is going to meet the 5-day moving average, is going to be around $243. Today's high on the video was 233, so we have 10 points of room to the upside. That's all we're looking to do. We're looking to get long over today's highs, and we're looking to sell into resistance. Whether the stock wants to shoot up all the way here, always know that it could snap right back. So we're not looking to get into the stock here because we want to hold it all the way here. That's not what we're looking to do. We're looking to get into the stock once it confirms today's highs, and we're looking to sell into the next area of resistance. See what it wants to do there. Does it put in a new top? Does it come back and back test? Does it bounce this? Then we could take this bounce and go long. But if it can't hold this back test and comes crashing down below 233, then we know that we have another potential short opportunity here down to 208. So that's just kind of how you play these stocks. I'm just going to take a look at one more. We'll take a look at something like Apple. Apple, same thing, green hammer candle. That price would be 162.36. We have measured potential to 164.98, 165. So we have about 2 to 3 points of upside that we can play. If we confirm today's highs, we can take this trade and potentially sell into this level of resistance here at the 5-day moving average. That's kind of like what stocks are going to look like on a dead cat bounce. You're looking to bounce them over the previous day's high, and you're looking to sell into the next area of resistance. It does not mean, hey, everything is green, everything looks great, we're going to get in long here and the market's coming all the way back and we're going back to all-time highs. That's not what a dead cat bounce means. A dead cat bounce means that we're going to take it over today's highs, we're going to play it into the next level of resistance, we're going to take our cash flow, and then we're going to see what we do. Do we chop around sideways? Do we back test those highs and bounce off? That's another key signal to get long. Do we put in a new high, back test that new high, and then push off? That's another signal to get long. So those are all different trading setups, but the main setup that we're looking for going into tomorrow is going to be a hold over today's highs. We're looking to get in over today's highs and sell into the next area of resistance. I kind of hope that helps. Subscribe to my channel, join my Discord. That link is down in the description box below, and I will see you guys all in the next one.